Liftoff confirmed.
Falcon 1 is airborne at this time.
We are hearing from the Launch Control Center that there has been an anomaly on the vehicle.
Artificial intelligence to strengthen SpaceX's space and connectivity platforms, transforming data into actionable intelligence at a global scale. The company begins trading today on NASDAQ under the ticker SPCX in what stands as the largest public offering in the history of capital markets. As the home of innovation and the home of the innovation economy, NASDAQ is incredibly proud to be SpaceX's partner as it builds the physical and digital infrastructure of the future. Your mission is now backed by the financial engines of the public markets with access to every investor everywhere. Congratulations to the entire SpaceX team. We cannot wait to see what comes next. And now please join me in welcoming SpaceX's President and Chief Operating Officer, Gwen Shotwell, for her opening remarks.
Good morning, everybody. I am so excited to be here. Today we make history again. We have a history of making history. So I want everyone to know that we did open this morning in a rather exciting way. We launched. Falcon 9 launched Starlink satellites to orbit. So what company would do such a thing on the day that they open in the public market. SpaceX would, right? I am so proud of this team. Today, this year we are 24 years old. Elon founded this company in 2002, initially to build rockets and spaceships that will take humans to Mars, the moon, and even beyond. We've not quite gotten to Mars. We're almost at the moon. But let's just quickly run through the amazing things that you guys have accomplished. 2008, 6 weeks after a failure of Flight 3 Falcon 1, we got the first liquid-fueled rocket to orbit from a private company. Yay. Yay. By the way, I should have prefaced this with, everyone said we could never get to orbit. Check. But it was a little rocket. Then everyone said, well, you can't get a real rocket to orbit. 2 years later, we got a real rocket to orbit, Falcon 9. Oh, well, you'll never get to the space station, because that's what we really want to do, right? We want to take humans outside the bounds of Earth, but you'll never get astronauts to the space station. Check. We did that too. Doubters, right? Oh, you'll never fly Falcon 9 enough. You'll never get to production. 165 launches last year. Check. You'll never build a rocket large enough to take humans to the moon and Mars. We build one, we've flown it, and this year, I believe we'll get to orbit with that vehicle, and we'll recover the second stage. We've already recovered the first stage and reflown it. So good on you all for that, too. With the merger, the acquisition of XAI, we now, as a group, own the largest coherent gigawatt-class compute on the planet, which will help us truth-seek and understand the universe. So congratulations to all of us for that. So we're about 22,000 strong. I'm super proud that over half of us actually bought additional stock in this opening, totaling almost $1 billion. So thank you for that, too. But really, the thank yous go to all of you for hanging in there, for keeping a straight spine as the doubters doubt, to achieve historic things, sometimes every day, multiple times a week. Thank you, all of you, for doing this. And I hope today is a day that you feel great about and that you're celebrating. Take a moment. Now, the Falcon Recovery Team can't take a moment today, but everybody else can, and I hope Falcon Recovery Team could take a moment a little bit later. Yeah. And also, thank you to the families, the partners, the plus ones, the children, the brothers, the sisters, the parents that have lived through long nights, that have seen launch failures, that have seen AI compute go down, that have seen kind of the trials and tribulations of this incredibly difficult business. Thank you so much for hanging in there. I know I can't do this without my incredible partner and husband, too. I know you all have been a great source of support for all the SpaceX team, and you are a huge part of this success, too, so thank you for that. I haven't mentioned Starlink and Starlink Mobile yet. We're probably connected through that, so incredible team to do that, connecting those that are unconnected, and I'm really excited about the future of that. In fact, as I was meeting with literally almost 1,000 people in person over the last 2 weeks and almost 100,000 through telecommunications, hopefully on Starlink, what was clear to me as I was talking about the future and they were asking questions about what we'd achieved and what we're going to achieve, what was clear to me is that we are just beginning. It might feel like a long haul, but it's going to be even more exciting going forward. So thank you again. I want to introduce my boss of 24 years, the chairman of this incredible company, the CEO of this incredible company, and the chief designer of this incredible company, Mr. Elon Musk, who is in Starbase, Texas, and he's celebrating there with 4,000 or 5,000 people. Thank you so much.
Well, thank you, Gwen. Gwen Shawwell's been an incredible partner and was one of the first people to join the company. And so thank you, Gwen. Oh, she's in New York, of course. Where is she? Yeah, it is certainly hard to believe that a little company that started in a warehouse in El Segundo is now going public for with the largest IPO that ever. And let me tell you, if people had told me this was going to happen, I was like, man, you must be smoking some really good crack, because I think this company's going to fail. I mean, I gave SpaceX less than a 10% chance of succeeding at all, to be clear. In fact, I told people this. I said, look, we're probably going to fail, but we should give it a try, because if we don't, if there's not a new company that enters space, we will never be a truly spacefaring civilization. While the other aerospace companies, they build good rockets and everything, they were simply not pursuing the technology that's necessary to make life multiplanetary, to make Star Trek, to make the exciting science fiction futures that we've read about real. And that's what SpaceX is all about. It's to take the fiction out of science fiction and create an exciting, inspiring future for everyone. We want to be able to take anyone who wants to go to the moon, anyone who wants to go to Mars, or anywhere in the solar system, and maybe beyond the solar system at some point. We want to be able to take you there. Not just a few astronauts. I mean you, literally you. If you watch, whoever you are watching this, SpaceX wants to be able to take you to the moon, take you to Mars, and ultimately beyond. And I'm confident at this point that with the incredible team that we have here at SpaceX, that we will do that for you. I always think about this. There are always problems on Earth. There are always problems on Earth. There are always things that we wish to be better, that we want to solve here on Earth, and we should solve them. But there also have to be things that get you excited about the future, that make you glad to wake up in the morning, because you can't wait to see what happens next. And that's the future that SpaceX wants to bring to you. Yeah.
there's no one there to raise them if you did. And all the science I don't understand, it's just my job 5 days a week. A rocket man, a rocket man. And I think it's gonna be a long, long time till touchdown brings me round again to find I'm not the man that think I am at home. Oh no, 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 I'm a rocket man, burning out his fuse out there alone. And I think it's gonna be a long, long time till touchdown brings me round again to find I'm not the man that think I am at home. Oh no, 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 I'm a rocket man, burning out his fuse out there alone. And I think it's gonna be a long, long time. And I think it's gonna be a long, long time. And I think it's gonna be a long, long time. And I think it's gonna be a long, long time. I'm not the man they think I am at home. Oh no, 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 I'm a rocket man, burning out his fuse out there alone. And I think it's gonna be a long, long time till touchdown brings me round again to find I'm not the man that think I am at home. Oh no, 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 I'm a rocket man, burning out his fuse out there alone. Mars ain't the kind of place to raise your kids. In fact, it's cold as hell. And there's no one there to raise them if you did. And all the science I don't understand, it's just my job 5 days a week. A rocket man, a rocket man. And I think it's gonna be a long, long time till touchdown brings me round again to find I'm not the man that think I am at home. Oh no, no,
Winter, and I am the editor and host of the Downlink podcast. And today is IPO day. This initial public offering, or a company that values itself as being worth at least $1.77 trillion. It's the biggest IPO ever. This is market history, and this is about a space/AI company. So because of that, we are doing something special today in partnership with Stacks Talk. We are streaming live just about, I don't know, what are we, 2 hours, hour and a half since the bell was rung and the IPO was announced as being quote unquote live, though I don't think that the actual securities are trading yet. But yeah, you know, this is on NASDAQ, and you can follow the SpaceX IPO in terms of the price of the security by following the symbol SPCX. I am joined by 3 of the best money and space minds there are. That's Chris Quilty, founder and CEO of Quilty Space, George Pullen, chief economist at MilkyWayEconomy, and Lou Whiteman, a Motley Fool stock analyst. Now, gentlemen, thank you so much for joining me today.
Excited to be here. Exciting day.
Yeah,
Thanks,
no
Laura.
place
Great
I'd
to be
rather
back.
for this. Yeah. Oops,
Now-
sorry, George.
Oh, it's all right. Now, before we go any further, I have to let you, as in everyone out there who is watching or listening, this discussion is not advice. You should do your own research and make your own decisions about SpaceX or any other security or investment. So today is huge, gentlemen. Today is historic. But what does it actually mean? Sure, I think most people that are watching this day, I mean, they get that it marks a point when a private company goes public, in that anyone who is willing to pay a price can now own stock in SpaceX, Elon Musk's massive company. But what does issuing shares really mean for the company and its private equity investors and even its employees? And in fact, SpaceX has 22,000 employees, and some of them, about half of them, I believe, own stock in the company, and they're not necessarily the same thing, right? So, George, could you take a moment and explain this for non-insiders?
Sure, happy to jump in here. I'll put on my Professor Pullen hat for a second and do some Econ Finance 101. So an IPO, or initial public offering, is when a stock becomes widely available via a market offering platform such as NASDAQ in the case of SpaceX, but also you have the New York Stock Exchange is another great example, where normal people can purchase the stock through their IRAs or perhaps through their individual brokerage accounts. Okay. Before an IPO or an initial public offering, a company is considered private. Now, a private company goes through its normal maturations, right? And these are the things that I talk about all the time when I'm on with you, Laura, where you go from a seed stage company to a Series A, to a Series B, to a Series D, et cetera, et cetera, et cetera. And along the way, you get better, you get bigger, you have more employees, you have more traction. And someday, Pinocchio becomes a real boy and gets to be looked at by the whole world as a public company. Okay, so that's essentially what's happened and what we're witnessing today with SpaceX.
But what does it mean for the private equity investors, the folks that were there like at the beginning in seed, Series A, Series B, D, C, E, maybe F?
Porsche.
Yeah, and
Right, so
the employees too, right? I mean, they own stock because they've been paid in stock.
Right. Well, the difference between a private market company and private market structures and public market companies and public market structures is really liquidity. Right. That's the most important part for individual investors to understand whether they choose to participate today or not. Because when you have a private company having access to being able to buy into those companies, right, via secondary market offerings, or being able to sell if you're an employee, is quite restricted and governed by the rules of that company. Now, some companies have very open and flexible rules for small transactions, right? And others have very restrictive rules. So it's all based on what that individual company wants to do as a private entity, right? So that would be they issue more stock to have a private equity firm come in. or perhaps they do a few different rounds and have some special purpose vehicles, SPVs, come in pooling, large family offices or multiple family offices, MFOs together to infuse capital. The way there might be a few of sell a small chunk of what they have, but usually that's, again, very restricted. When you are a publicly, your stock is open and available to a very wide segment of the population to participate. So that is the key difference.
I think Professor Pullen needs to find better internet. Right. Well, this is live. But nevertheless, if you want to hear everything that George just said, please do take a look at the recording of this, which will be available on YouTube. Just look up Stacks Talk and you'll find it. But moving along, because this is such a huge deal, perhaps the first in a series for SpaceX, there are a number of questions about this IPO, which I think need covering. And let's just start really simple with what. So Chris, what is SpaceX? Because until this year, all of us used to get together and talk about SpaceX as a space company, but now it's something different. 3 business segments, one is profitable, one is not so profitable, and one is being called a cash incinerator. So those really are the exact words used by a number of analysts and market investors. So what are investors really buying when they purchase this stock? Chris?
Yeah, so I think what we had, as you said, was a world-dominating space company, not a monopoly, just to be clear, but a company that was really redefining what it is to be a space company and a space industry. In fact,
they disrupted. Let's just call it. They disrupted. By being able to have reusable rockets and then also making a real business in satellite communications, like nobody else has done before, direct to mom and pop, consumers.
Absolutely. And, obviously I'm a space guy, right? So there's this other thing called, XAI that's getting bolted on with, obviously X built into that. And that's a different component to the company. At one level, this is a sum of the pieces, right? There's a couple of different pieces that have very different valuation, growth, capital requirements. And, standard, you would kind of put those together. Now, obviously, you don't put them together unless you think there's some synergies or other reasons to do that. And in this case, I think it's pretty obvious that part of the rationale here is to use the free cash flow being generated by the Starlink business to fund the capital needs of the XAI business. Bottom line, that's it. But what we also found in reading through for about a day, it took me the S1 in detail, was the synergies that they're looking from here, the 1 + 1 = 3, really drives around how you can create value from putting a AI company with the SpaceX, and the answer there is orbital data centers. And I think if you're going to create value, and certainly that was the claim in their documents, if you kind of read it, was XAI has been trailing a lot of the competition. This is a way for them to potentially leapfrog the competition if, in fact, putting data centers in space is the wave of the future. Well, guess what? They have the keys to the kingdom. And if that strategy plays out, then there's probably those synergies and will accrue to investors. If it doesn't, well, we'll have to wait and see.
But, what do we call a company? Just this morning, I did see some video coming out of SpaceX as I was watching NASDAQ, right? And it did say SpaceX-AI, right? And I really want to key in on the words of synergies, because you did say, well, there's some synergies here. But the other thing that we have also heard is that, Elon Musk has a plan to have SpaceX buy Tesla. So what is this company? What is this? It's not a space company. It's not an AI company, but it's a company. So Yeah, what is
I think
this?
that's a good question for Lou.
Okay, yeah.
All right.
So what is it? It's all the above. I think it's important. And again, I don't want to be a cynic here, but look, the S1, the document you have to file to go public, is in some levels a marketing document. So it's almost like your, Match.com profile or your social media profile. You are putting out the best version of yourself. And right now with AI hot, I think that part of this is, hey, look at us, we're AI too. Okay. And there's nothing wrong with that. It's within regulatory limits. So, but I do think it's dangerous to just like take the bullet points of the S1 at face value and say, this is what they are. Look, what are they today? They are a lot of things. And honestly, and Laura, I think we talked about this a few months, if there's a case for what this really is, and it's probably also the case for why maybe the Tesla deal makes sense, this is an investment in Elon Musk's ability to take capital and build value over time, whether it's in space, in electric vehicles, in solar energy, in AI, in communications, whatever it is. At the end of the day, most investors in Tesla aren't anymore like, oh, I just want an EV stock and this is an electric vehicle stock. They are, I believe Elon Musk over time will create value. And why have two competing securities on that? So I guess, that's the argument for a merger, but really the answer to what SpaceX is SpaceX is a way to invest in Elon Musk's vision for the future that involves trips to Mars, electric vehicles, taking rockets to Tokyo so you don't have to worry about Boeing 747s, all of the above.
All right. Well, Lou, I want to stick with you, right? Because let's look at the why and why now. A while back, Elon Musk said he did not want to take SpaceX public until after making sure that the goal of reaching Mars with humans was secure, right? Just like you said, he wrote that in an email in 2013. So yeah, it was a while ago, but unless I'm missing something, sending humans to Mars is definitely not settled. And Musk hasn't just simply dropped that goal. And in his email, he also listed a whole bunch of reasons why he felt then that going public is, well, more trouble than it's worth. But importantly, in that email, he also said his other companies, Tesla and Solar City, he said they were taken public because there was no other choice. He wrote, quote, their private capital structure was becoming unwieldy and they needed to raise a lot of equity capital. So Lou, you've read the prospectus, which is the S1 that all of you are referring to. It's kind of, it's a lot of pages and it's basically why you should date me. Is this the same case here though, right? Does SpaceX actually need to go public, and does it need to go public now?
First of all, are you saying that Matt Damon movie wasn't a documentary? We're not on Mars? Okay. I'm learning stuff already.
That was a great movie, but sadly, that's not even close to being true.
Not a documentary, yeah.
So, not a documentary.
So the why now question, like all of us, even in the billions and trillions, like all of us, your wallet dictates terms, right? We all have our dreams, but then there are economic realities. And the economic reality is that they need money all over the place. And they are, as a private company, they still have access to a lot of money from a lot of different places, but they are denying a real source of capital. And that's an issue. The big what changed is back to what Chris was saying. It's just the AI part of it. XAI has totally changed just the economic needs of this company. They needed money before then, but now they need real money. Just SpaceX has $29 billion in debt. Most of that, 20 billion of that, is a short-term loan taken out as part of the XAI deal that has to be repaid within 6 months of them receiving the IPO proceeds. So that's going to be a big chunk of what they're raising here. They're raising what, 75 billion? 20 billion is going to the banks almost immediately. They could also end up owing EchoStar, at least $8 billion as part of that deal. That's cash out.
No, it's 20 billion.
Well, at least, I said.
All right. Well, it's 20 billion. It's supposed to be 19.6 or 19.8 billion or something. But just to bring everybody up to speed, EchoStar is another space company, and they had a bunch of radio spectrum. And radio spectrum, you can think about it like pipes. right? And if you own the pipe, then you get to use the pipe to send things back and forth, right? So it's really important to have spectrum so that you can communicate with the satellites that you put up there. In fact, even communicate, with your, rocket and your launch system. But it is the right to transmit data. And EchoStar had a whole bunch of this. It had a big pipe, and it sold it to SpaceX for a bunch of money. But I believe at the end of the day, SpaceX still owes EchoStar 19.6. There you go.
Up to. Yeah, right. And I think
Right.
that's what they'll end up doing. But lots of money.
And so that's like 40. I mean, that's what, 40 billion, 50 billion dollars.
But wait, there's more.
Oh, there's more. Okay.
Well,
but
look,
more.
okay,
Yeah.
So the biggest surprise, I think, of all of the amazing numbers in the prospectus, in the S1, and there were some real doozies of numbers, shall we say, there, but the AI business is losing money even before you account for CapEx. And now CapEx, just to use the term, CapEx is the equipment spending. These huge AI data centers that we see, all these companies are spending, what, 500 billion, 600 billion a year on. Even without that, just the revenue they're taking in and just the cost to keep just people running the thing, they're even losing money there without you doing all that spending. They need a lot of money. I mean, look, I don't understand, honestly.
And they need it soon.
Yeah. And it's kind of vague what they're doing here.
Issue.
Maybe they don't need the kind of money that OpenAI and Anthropic, if they are shifting to business, but they need a lot of money. We haven't even talked about the Terafab project, these Tesla, SpaceX, where they're going to build chips. I think that's 50 billion, right? Starship still needs some investment, by the way. Remember Starship? Remember when Starship was the big cash outlay at what, 10 to 15 billion? That's kind of an afterthought in this discussion. Bottom line is, and again, back to simple answer to a simple question, why are they going public? Because they need money.
Okay. So now I'm opening up the rest of this to all of you, and I do encourage you to do what you love to do, which is to jump in, right? But perhaps this next question is a little oversimplified, but guys, what is SpaceX actually worth? We know what Elon Musk says it's worth. There was a campaign to value the company at $2 trillion for this IPO. But just as recently as February, SpaceX rated itself as being worth $1.25 trillion. And then all of a sudden, now it's worth more than $1.77 trillion. That's with the T, everybody. And that's like a $5 billion bag of value that has magically appeared for a company that, well, isn't profitable. And Morningstar, the financial services and investment research firm, it's headquartered in Chicago. Its analysts estimate that SpaceX is actually worth, hold on, $780 billion. That is well less than half of what SpaceX says it is. And now that it's trading with a market cap of, I don't know. And what is the latest share price estimate, Lou?
Well, we're still waiting. I think 174. So it's going to market cap about just pushing 2, right around 2.
So that's what might happen when the shares actually start trading, which should be any minute now. And then yet again, Morningstar wrote a few days ago that while they agree that SpaceX as a company is solid, like it is, they think it's a good company, but they think its price per share should really be $63. So what's a normal person to make of all this? And who wants to take that on first?
It is worth what the market is willing to pay for it. And what I think we're seeing in the structure and execution of the IPO is intended to support that valuation. Huge amount, as Lou said, it was a very entertaining read on the S1, which by the way, I mean, they weren't supposed to go public until there were boots on the moon, boots on Mars, excuse me. And, the reason why Elon had always said that is, clearly public investors would never invest in a company that was, had that as their goal. Well, it's spelled right out there in the S1. So if you buy this thing, We may think it's crazy to have some of the language in there, but it's in the S1. You cannot say, I did not know they were going to spend money on going to Mars, right?
Oh, for sure. I mean, I think anybody who's been following Elon Musk for the past 15 years would be blind or deaf or something else if they didn't realize that. I mean, he wears a T-shirt that says "Occupy Mars." Like, this is a primary goal for him for his life. His life's work is to get to Mars and build a city, I believe, that should have 1 million residents, right?
Yep, except for the fact it's the moon first now. But anyways, what I was going to say was, I think the structure of the IPO is kind of interesting. Different, of course, different than we've ever seen with any other IPO. The fact that they set the price, didn't let the market set the price. They're like 4 times oversubscribed is what we're hearing. So you build up the book to have the demand. Of course, they're also have made this strong push to get the stock put into the index earlier than the rules had historically stated. So there you get another wave of buying activity. And the other thing that I thought was pretty interesting was the 30% of the shares that were reserved for retail investors. So look, historically, when you do an IPO and you're pricing this thing, the vast majority of the shares are allocated to your institutions, right? And there's sort of a quid pro quo that goes between the banks and the investors, and your most favored investors are going to get the share. So why do you put 30% of the shares to retail investors? And I think part of the answer is retail investors have different valuation and buying criteria. They're a little bit more susceptible to hearing a story and not looking at valuation. And just looking within the space universe, you can look at a company like an AST Space Mobile that has very effectively, motivated the retail investor base to buy into that story and buy into the stock. And so I think you take all those things together, and I think the underwriters have engineered this in a way that they're trying to prevent the downside scenario of this being overpriced out of the gate.
Come on, George, let's test that internet. Nope, way down here.
Clearly, he needs Starlink.
He does. Clearly.
Not a paid advertisement, by the way.
That's our friend George. We would love to hear from him, but he needs better internet. He needs Starlink.
So what is it worth? I mean, Chris answered it right. Now we know. Now we have a security to trades, and so we can answer that. It's not just people's back of the envelope. I think it's important, without getting too in the weeds, though, to talk about, I mean, if there is anything that is more, there's nothing that's more dark arts about investing than valuation. Valuation is just kind of your view or the market's collective view on what something will be worth at some time in the future. You almost never price these things based on today's business. We only have to look as far as like Rocket Lab for that. It's a dirty measure of it, but like there's a difference between book value, which is if the liquidator came in and just sold every stapler you have or whatever you have, what it would be worth and what it trades at. Alphabet trades at 9 times book value. Rocket Lab trades at 27 times. So you always have especially on the public side, but even with private, when you're raising money, these things, what it's worth is more a collective wisdom on the potential and how easily they can get there. And that's why stocks go down sometimes, because that is very easy to get wrong. It would be a lot easier to do stocks if we just always valued these companies based on what they just told us over the last 3 months or something. What it's worth is what people are willing to pay for it. And, I think there is a real there, whether or not they can execute on it. But the other thing I think is I think this might be surprisingly sticky, just because I can't imagine any of those retails and a lot of the institutional investors that, as Chris was saying, the thing about this company is I don't think next quarter's results are going to change much. So if you think it's a buy today, I can't imagine what's going to happen in the next 6 months, it's going to make you say, oh, wait, never mind, we're wrong. One of the things we've seen with Tesla is Elon is always 3 to 5 years out. And so I'm not saying near-term results don't matter. They still need, I mean, especially on the Starship side, they're going to get some phone calls from NASA if they don't figure that out soon, right? So, and not just NASA, but half of the private space economy is kind of waiting. It feels like it's waiting on Starship. But, so there are near-term consequences, but valuation-wise, it is what people want to pay for.
I'd also like to just jump in real quick because you mentioned Tesla. I saw and I was able to verify that if you owned $1,000 worth of stock back when Tesla came onto the market, and I think it was trading at like $17 or $18 a share or something, that would be worth above $390,000 today. And so that is quite a stark, way to look at value and what you invest in and also how long it takes to actually give you that kind of a return. All right, George, let's see.
But isn't that comparing apples and oranges a little bit?
I think so, except for the fact that Musk,
because if Tesla's right, so Tesla debuted as a automobile company,
and it was
somewhere along the way, right, and somewhere along the way, it said, well, actually, we're a battery company. Well, actually, we're a robot company. And as it went through its pivots and maturations, which, by the way, companies are allowed to do, big or small. But along the way, it's always priced itself at a price to sales ratio, or PSR, far above that of its peers, right? It's priced far above that of General Motors. It's priced far above that of Ford. And so if instead we look at it from that point of view, which is there is a positive Muscovian effect on multiples, then we could say, okay, given that there's this positive Muscovian effect on multiples, we could say, okay, what's a classic price to sales ratio that we see in aerospace and defense, right? Which would be like the SpaceX segment, traditional SpaceX segment of launch, right? And you say, well, that's about 3 times. And say, okay, but what is it for the Starlink portion, right? The telco portion. And for the telco portion, it's closer to like 2.5, right? So it's a little bit smaller. And say, okay, well, what is it for the AI portion? And then everyone should have a really long pause because I don't know. And no one knows. And this is really a 90% bet on AI, not a bet on space. And so as much as I want to give you a whole bunch of space numbers and space economy numbers, because I love that sort of stuff, I don't think most of those apply here, because fundamentally this is
it didn't apply. I think SpaceX actually said that their growth, 98% of their total addressable market, which would be their growth, is AI.
Right. So when I looked at the takeaway I had was when they were talking about their TAM, or total addressable market, which is something we're probably all familiar with from seed stage and Series A and B companies, they were saying that the space solutions portion, or perhaps it was space enabled solutions portion, was sub 400 billion, right? That is an extremely small percentage of the overall total addressable market that they shared with people in the S1. And so even though the name is SpaceX, I think really this is about what do you value the AI segment at? And to think about that, it's really people who have the expertise to value, Anthropic and to value OpenAI as they emerge as public companies later this year. I think that will be an opportunity for people to see where they trade and what those multiples look like. And then we can do some comparisons. Because again, since only 5 or 10% of the business is really space now, I don't think we can use space multiples anymore.
Yeah. Laura, the other thing too, and just the caution on the Tesla comparison, because I do think that, it's an interesting comparison, but how much of the value has been accrued prior to the IPO? Tesla's market capitalization at IPO was about 1.7 billion. So there was a long runway for once it went public. God willing, there is again at 1.7 trillion, but you do have literal orders of magnitude different as far as where the starting line is for retail investors versus where it was before. But I'll be honest, I'm full disclosure, guys. In my day job back in, what was it, 2010 or so, I'm one of the analysts that wrote, this auto business won't work. So I got it wrong before I could get it wrong again.
I wrote a piece back in 2015 when SpaceX and OneWeb, emerged that it's never going to happen. Can't possibly launch that many satellites. You got to figure out these optical crosslink things and flat panel antennas, and satellites don't last long enough. And yeah, I was proven wrong.
Oh, and you were not alone, Chris. There were a whole bunch of people that I spoke to at that time, and they said the same thing, that it had been tried before, and that these companies that had tried to do this in the 1990s, that they were sold for pennies on the dollar. That was the quote.
Yeah.
So,
I think that brings up an interesting, that brings up an interesting thought exercise, right? Which is, let's assume that this ends up being right? And that somehow this company is actually worth $2 trillion today and $4 trillion tomorrow, right? Let's just pretend, ceteris paribus, right? We'll pretend that's the truth. If that is the case, then what other companies and what other market segments are in line to benefit that we're not considering? I think that is a much more interesting exercise than, is the 135 to 175 jump interesting, and what does that mean? If it jumps from 135 to 175 in 10 seconds, there's only about 1,000 people that benefit from that, right? It's not your grandfather who's trying to get in on his, on his phone, right? He's not getting that 40-point move. So the more interesting question is, who else is benefiting, and how many of them are companies starting up tomorrow, and how many of those are already public companies? So I think that's an interesting thought exercise.
Oh, it is. It is.
Well, and I would point out, though, back to your question, right? If 99% of the value is coming from AI, I would point out that 100% of the ability to make that happen is dependent upon one thing, which is Starship. Because you're not going to get orbital data centers without a Starship. Actually, you're not going to get a Starlink V3 satellite on orbit, or you're not going to do the human landing system without it. And I guess my point, I would argue with him that that's where the value is coming from. I think it's coming from the space side of the business, a good portion of it. We're already seeing now, there was a news story the other day that Anthropic or OpenAI, I forget who it was, is thinking about slashing prices, right? There's going to be 2 or 3 of these big AI companies. And at some point, I imagine they're going to have to, compress pricing and compete. Alternatively, when you look at the opportunity that they're creating with Starship and the sort of lunar and cislunar economy, that's one where the value creation will accrue almost entirely to them, at least here in the near term. And in fact, if they are creating a new space economy, right, that doesn't exist today, we're seeing it happen on the SpaceX side of the business, where we logged about 18 billion worth of government contract potential just in the most recent budget. They landed 4.2 billion for the ATMI. There's, Andromeda contracts for building neighborhood watch vehicles that are, getting upsized. There's a huge amount of government demand and need that we're seeing in the space environment that, could eventually lead to those sort of manufacturing on the moon and mining asteroid type stuff. Is a lot of value out there.
Right. Real quick, somebody needs to check on whatever is making a clicking sound. Just asking. But moving along, it would be fair to say that today SpaceX will have successfully raised the $75 billion that it was looking for, right? Do we all agree on that?
Yeah, that part's done.
Yeah.
Okay. So
plus the green
75 billion sounds like an enormous amount of money, because it is, or 75 billion. Did I say million? Gosh, excuse me if I did that. But yeah, 75 billion, big amount of money. But Cape Fear Advisors, and that's an independent financial research firm. Greg Collins runs that shop. He did the math on every commitment, which I know that Lou, you alluded to earlier. but every commitment buried in the prospectus, aka that S1. And he found that SpaceX needs roughly $235 billion over the next few years. So that's roughly 3 years. And that's 3 times what it's raising today. So where do they get the rest of the money? Anybody? I mean, are they selling children?
Just issue more shares. No, you just issue more shares.
Yeah. Part of the answer is they have one more avenue to raise money today than they did 2 days ago. There's still a lot of ways you can raise money. You can go to debt markets. You can go to equity markets. It'll probably be all of the above. The other side of it too is that I have no issues with any of those numbers, but all of those future capital commitments can be adjusted based on the reality of the moment, as can the revenue side. I mean, they are selling off a lot of future capacity in their data centers in Memphis, adding a lot more revenue than I think even 6 months ago I would have imagined.
But those contracts are short term, Lou.
Well, right, but it's real money today. But it's it's real money today, and the point being is
they deliver the capacity though, and that they have to do a build out for that, which is why they need the money from today's IPO.
Yeah. But I mean, the point being, though, it's really hard to think of any of these things as static. There are a lot of ways to raise money. There are a lot of ways to adjust spending patterns. They still have a lot of work to do. This is still the early days of a story. You could use that to be bullish, I think, because there is still a lot they can accomplish too. But yes, they will, I think, inevitably return to the markets at some point, or it would surprise me if they didn't, as one of many levers they'll pull as they need to raise money to invest in the future.
Well, and of course, we would hope also at some point in the future, all 3 of the businesses will be generating cash. Starlink already is, and it's scaling. SpaceX, they've got a big CapEx nut they're working through, but once they get over the hump on Starship, it goes from cash consuming to cash generating. And I don't know about the AI business.
Yeah.
George, you jumped in.
I mean,
quick.
let's not miss something here, right? So there are plenty of other companies that have consistently lost money and consistently gone back out to the market to get more money. So a famous example that's been well reported and studied is Uber, right? Uber lost money for years, decades even, and they would continue to return to the market and get more money and continue to offer rides below that of which covered costs and market pricing. We're seeing something similar perhaps in a few of these market segments. And that doesn't mean the market won't bear it. In fact, the market might bear it for a very long time.
Right.
This is the.
We're gonna keep on moving. So sorry there, Lou. I hate to cut you off, but I just got to keep this going because I've got a few more questions to get through before we close up, and I really want to get to what we love to talk about, and that's the space sector, right? SpaceX says that 93% of its future total addressable market is artificial intelligence, not space. So let's just sit with that for a second in kind of a philosophical, forward-looking way of how investment may go, because the company that put more satellites into orbit than any other company or nation, the company that flies astronauts to the space station, is telling investors that its future is really about AI, and the value of that future is the greater part of $28.5 trillion. That's what they think it's worth, which is, it's such a massive future that the only comparable in terms of value is the entire United States GDP, which is approximately just under $30 trillion. So if you believe all of that, then, whether you are a pension fund, a venture capitalist, or just someone with a brokerage account, it seems that you have to ask yourself, if Musk says the future money is really in AI, how does that affect the amount of capital available to space companies? And this is more than just a post on SpaceX. I mean, this is the point of the prospectus. So guys, how does that affect how people think about investing in space?
I got an answer for that because I was just kind of totaling up the capital inflows, and then we'll focus on the venture market, right, which was non-existent, prior to SpaceX or prior to 2015, really. I just looked at the first 10 days of this month, and we've seen about 1.7 billion come in. Last month was 1.2 billion. The record we've ever seen back at the height of the SPAC bubble was 2.2 billion, right? So we are seeing other companies in the space industry accruing value from investors starting to focus on this industry. And look, I've covered the space industry since the mid 2000s. And for 15 years, I was the only analyst writing on the industry because, well, quite honestly, the industry sucked. I mean, it was pretty boring. And now I guess there's now 50 space analysts on the cover of SpaceX, right? So you're going to see investors looking for other ways to play it. And going back to the venture market, right? The bread and butter investment for those guys was SaaS. I don't think that's where you're going to put your money nowadays. So you're seeing it flow into things like defense tech and space, hardware being cool. And we're seeing it in the numbers here. The question is, how long the legs hold. Is this a pop right around the IPO, or does it continue out into the balance of the year and for the next 5 to 10 years?
George?
I think too, there's something here about portfolio theory that we should just make sure people think about as they're thinking about this, which is whether you're a multifamily office or you're an individual or pension fund, wherever you might be, you have to think about your strategy from a portfolio point of view. That's, again, econ and finance 101 type stuff, right? And when you think about from a portfolio point of view, you're thinking about how much returns, how much risk, and how much revenue I'm balancing across a variety of assets. And if the higher end of that risk profile today is AI, that means that that's where I'm putting my riskier bets. So let's say that I have 10%, 20% of my portfolio in riskier bets, right? That means I'm not putting riskier bets into other things. More traditional, quote unquote, riskier bets might have been space and not AI, might have been biotech and not AI, right? So when the riskier instrument has the most attention, it's going to gather more of those assets because those risk pools don't have access to 100% of capital, right? There's still a large portion of capital that will stay in the quote unquote blue chips, the consumables, the manufacturers, the retail, right? And those funds aren't moving over tomorrow into a new AI company like SpaceX or into a new biotech company. That comes from a separate pool.
Are they going into space,
I think,
though? Because Chris just said,
that's
1.2 to 1.7.
That's my point. The risk.
I'm not sure that they're really going into space either, even though there's more.
No, that's the point, right? That's the point, which is if I see market appreciation in things like OpenAI and Anthropic and SpaceX, obviously as an AI company now, that's where my attention is focused, because if I'm going to take that level of risk, why would I take that same level of risk and not get those outsized returns, right? Why would I instead take my risk in a pure space play or instead take my risk in a biotech play? I probably wouldn't. I would take my risk where everyone else is taking the risk, which is in AI. And so that's it. You're only fighting for that risk on capital. You're not fighting on people who are doing bond payments. You're not fighting on people who are in blue chips, right? Those dollars are allocated over there, right? So for the risk on money, you're really talking about competition for and in between AI firms only, which SpaceX is now 90%.
And how are space companies then faring? They're getting better according to Chris's numbers, but what are you hearing out in your world? You are in venture capital land. You put money into new space companies. How is the environment?
So almost every space deck I have seen in the last, I will very conservatively say 12 months, has included one of their 10 slides to have AI on it. So they are very much leaning in to this moment and explaining how they know. They 100% know.
So on this idea of what the total addressable market in the prospectus means to the space economy or to other space companies, I would note again, and maybe I'm being too Pollyannish here, but the prospectus is a marketing document. It wasn't probably written, it was written in with SpaceX's input, but this is the bankers. And look, they put on their best Lululemons and they get ready to stretch wherever they can. And I would argue that there's actually more ability to stretch right now in AI because there are question marks about it. SpaceX, we kind of know what they're doing on the space side, and we can sort of model. I mean, we can get all sorts of.
We know what the plan is.
Right. And look, let's be honest. If I'm the banker on that deal, I am looking at Rocket Lab's valuation, and I'm saying that is gospel. So there are still ways that you can put your best foot forward. But SpaceX, if we're honest, they do a lot of things in the space industry. There's a lot of parts of this industry that they don't touch. So their total addressable market isn't the total addressable market from space. I think there's a world where if I was a banker trying to write this up, I would see a lot of creative liberty in coming up with the total addressable market on the AI side, where we're kind of all still just trying to figure out what it is, versus some of these parts of the business where there are comps and there are actual businesses. End of the day, I kind of, as far as what I think of space, I kind of take it with a grain of salt, to be honest, for those reasons. Not saying, it's not right, but look, it's hard to get to a number that almost hits US GDP. You have to be creative with it. Most of the creativity is obviously on the AI side. That's the 27 trillion number or something. So again, I think it's the product of a creative process. I hate to say it that way.
$28 trillion, $28+ trillion is pretty darn creative. But as we know, we are, running out of time here. I want to know from you guys, what is your number one outstanding question that you would want the company to do a better job of explaining? Is it the AI business model? Is it the total addressable market? I mean, is it too creative? What is actually outstanding in your minds? And be a little efficient. So, Chris, what you got? Any last questions that you really wish would be answered?
Yeah, it's a really, really hard physical problem, which is how you go from, order of magnitude 100 launches a year to 10,000 a year, or even 500 a year. I mean, given the physical infrastructure needed to do that, ain't going to happen. Not with what we got today.
We don't have enough spaceports. I mean, around the world, we don't have enough spaceports.
There's 2 in the United States that matter. It's the Cape and Vandenberg. And simple problems, a Falcon 9 uses 60,000 gallons of water. Starship uses 1 million. Ain't enough water in the water system to make that happen.
Great question. Lou?
So I'd go back to what my answer just on total addressable market, the AI side of it, maybe because I'm not an AI analyst, but that is just, it looks like an albatross to me. And I think at some point they do have to define what part of AI that they are chasing instead of just this everything. And I think we need to evaluate the business based on that and the reasonability of them hitting it. If the answer is Grok is going to replace Claude, I'm going to take the under on that. So I do think they need to better articulate exactly what it is they're doing in AI versus, look, AI huge, which is kind of what I read in the prospectus.
And George, I did save you last for answering this question because I know you're going to come at it from an angle that none of us saw coming.
I still need to understand the unit economics on the first data centers in space. I have real questions about what that monetization looks like. I have real questions about where tokenization costs will land, the continuation of the field of dreams in AI, which is if you build it, they will come, and we can just price it below cost for infinity. That doesn't work forever. And so I need to see what it actually looks like for that first data center in space. And then we can all start getting more comfortable with these numbers that, quite frankly, doesn't sound like any of us are comfortable with it today.
No, I don't think a lot of people are comfortable with it if you just, do a Google search, right? But here's the last question. It's prediction time, and no one should base their retirement on the answers, but I am personally interested. What do you guys actually think will be the share price a year from now? Elon Musk's shares, Class A shares, are locked up for 366 days before he can actually start selling those. So, yeah, I kind of wonder what sort of price it could be when he does and when he is unlocked 366 days from now. So, George, want to hit that one first?
Sure, I will go first on this one. And I will go first by answering with a story. And it'll be a quick story, which was not that long ago. And I know it wasn't that long ago because we had just all got done wearing masks. I had the opportunity to get in at 250 billion, and I said no then. And so I wouldn't get in today either.
But share price, what would it be?
Oh, so well, then you're talking about a tenth approximately of today. So that's a $15 price, more or less, maybe 20.
That's optimistic. I'm just being kidding here. Lou, you.
I'm not an AI investor.
So it's hard to figure out. And again, to me, 366 days is short term. I'm not worried about Elon selling because his history at Tesla is he's not eager to sell. If anything, he'll just take out loans or something. So that's not really an issue. But where will it be in a year? Again, I know there's going to be a lot of supply, a lot of demand. There's a lot of volatility from here to there. But who is buying today with a 5 to 10 to 20 to 50 year future is going to see anything in the next year that says, actually, Elon, I give up. So I say over, maybe not dramatically over, but if it goes out today, I think it's going to go out today at like 150. And let's say it'll be at 210 a year from now.
And what's the latest rumor? Has it gone up or down since we started talking?
150, they're still trying to make the book, it looks like. But right now they are settling at 150. They just haven't released it.
Oh, wow. That's $20 or so less than what we started with when we began this conversation. All right, Chris, bring it home. Close us out. What do you predict a year?
I'm going to give a Weasley answer, but
of course you are. But that's why I leave it for you last, because I know how much you love predictions.
I'm comfortable with it because I think it honestly has less to do with what SpaceX does or doesn't do in the next year, more than it does with what the market does. And I say that in the context of yesterday was a really busy day for me, and I did not look at the market until the end of the day. And when I looked at my screen, 18 of the 45 space companies I cover globally were up double digit. And that used to be an annual move for a lot of companies in my sector, and I saw it in a day. So I've been doing this a long time. I've seen markets get very aggressive and frothy, but I also know that things can stay frothy way longer than you think they will. So I'll leave it with that.
Chris, Lou, George, thank you guys so much for making the time.
This was fun.
It's fun even with George on.
George, make a noise.
Make a noise, George. Thanks, Lou. Chris, love you like always.
Broken signal.
Go Marine Corps.
Fix that internet. And everybody who's watching, thank you so much for taking the time to listen to what we have to say.